Good. Good morning.
Good morning, everyone. Good to see you. It is the Rich and Ange show, and I hope all of you are caffeinated up because it is going to be a wild ride.
Like the prep.
Fed day, Fed day, Fed day. Also, how was you've got a double cup thing going on there, Rich.
There we go.
What's going on?
It was a nice little gift last week. Cheers.
Cheers.
Cheers, everybody. Merry Christmas.
Merry Christmas
And
indeed.
welcome to the Fed special. So we are going to go through, we're going to tell you what all the investment banks are saying about tonight, what to expect, what not to expect, and what could come to bite the market in the bottom. So we got that coming up. What else have we got coming up? Producer Phil.
Here we are, here we go. We got, obviously, Guess the Charts. I'm being told that it's a brand new song genre today. Also, Phil, do we have a hint as to whether it's US or European? UK, it's a UK one. Home ground, people, home ground. And then we've got woman versus machine or versus the man. Angeline.
Are you still doing that, are you?
We are.
What's the current performance from last week?
Last week, the humans, Aaron was very happy to state that the human was slightly ahead of the machine.
What was the percentage, Producer Phil?
Yeah.
But what's the actual overall percentage? Yes, we're beating them.
9.2.
We are smashing them by 0.4%.
So we'll give you an update on that and how we're changing up the portfolio. And then after that, much awaited.
He's back. Yes, Piers Buckworth has managed to escape Hong Kong, and he'll be with me at 8:30 this morning. So we got all your tech updates, including Marvell. Marvell's had a tough week. Nice bit of editing there from Producer Phil. And we're going to be talking obviously about Oracle and Broadcom because we got to get them over the next 48 hours. Now, Angeline, how are you? Tell me.
Very good. I'm very good indeed. I came in rich as the man because I wrote during a meeting, I wrote something quite large on a notepad. And I looked over at Rich and it said, Meta is finally up money. See my face. This is a face of someone that's been waiting for it to be up money for
a long time.
A long time. 3 months. It to me is a long time.
Yes.
And I said, do I keep it or do I lose it? And Rich was like,
Get rid.
And I got rid of it and put it as a silver.
And how long ago was that, Ange? That was last week?
No, it was 2 days ago.
2 days ago. Beautiful.
I added more into my silver pot.
So let's have a look. I know there's been some smart people long silver, and oh my goodness, it's up again overnight. Did it pay off yesterday? Yes, it certainly did.
If you are maturing, I know you still have silver on your books. Many of you as well are Sachs. Well done you. If you were with me on this journey, this is not trading advice, but this is just me knowing what you've got on your books.
I'm teaching somebody trading at the moment.
Oh.
And so we decided, it said, right, what do you prefer, equities, commodities, or FX? And it was very much commodities. And I said, right, choose out of these commodities which one. So silver was the choice. And it was $58.39. It's $58.39. So it was here on Friday. Mm-hmm. And I said, right, long or short? Now, it just had quite a big move higher. Let me see, like this kind of move here. Mm-hmm. So my natural reaction is always, right, mean reversion. Okay, it's probably going to give up some of the gain. But no, they went and they bought silver and they went long, held it over the weekend. Mm-hmm. That was another choice. And then yesterday, of course, big move yesterday, and then walked away with a profit. £50 on their very first trade that they've ever made.
Nice, very nice.
So, and, small risk as well.
Yeah, so I popped mine back on after I came back from my holidays. That would be the end of October. And then decided to put another leg in, quite a large leg, even though I was thinking, maybe it's done. But when you see, was it 7 last week? 7?
6, 7?
6, 7. I don't get that, but everyone seems to.
Neither does Keir Starmer.
And with the volume remaining very strong, and always do your homework, people, always do your homework. So I called a few silver bugs. And then that Monday, when I was at the refinery, they thought I was filming. I was filming. I wasn't putting anything in my pocket. But what I was doing, promise. What I was doing was I was counting the number of, they call them tola. You saw Peter Hamber bring them in, and they cut them from, you know, these long strips. And so I was just doing a mental head count of how many gold tolas were being cut compared to silver. And yes, gold is still their main product, still, you know, their main cash cow. But demand and the number of silver tolas was going up.
I've missed doing morning shows with you. The time just flies.
Beep, beep. Julian, I'm just showing you my chart here. Julian, loving that, came here and he had a huge amount of silver in the bag, which he brought right here to the Trade Live studio.
Is that still the case, Julian? Tell us, update us.
Well, he was very clever. He had melted this down and collected it over many, many years.
Now, Ange, just on that picture, just explain to everybody what's in the background there. So who sits at those desks?
So behind us is the PCM desk. So you see the, you know, the Ronnies, the Luke Moore, the Pete Wards, all of them. And you can probably see Mini Cooper in the background over there. And what Julian wanted to see is every time I say it, I march over to the volatility desk. So I brought him with me that journey.
Which is where the person taking the camera is, right?
Yes, exactly. I think it was Jack that morning taking photos. So I put Julian in touch with Baird as well, because they also recycle silver. And he brought in a huge chunk. I think it was like 3 kilograms or 2 kilograms in his bag.
Of silver?
Yeah. Producer Phil lifted it too, to trade it in, to get it sold. And good timing, Julian. I hope you got in contact with Baird as well to try and get a better price.
Right, let's go into overnight action, see where your future markets are sitting. And then we have our big Fed preview. FTSE a little bit disappointing this morning, 9614, just a little bit of softness there. Not really sure why, actually. We want this 10,000. Why is it going down, Angeline?
We want your hats to be used.
Exactly. So S&P very stable around the 6,850 level. Tech much not really changed as well. Nvidia's rally faded away yesterday on the story that China was going to stay stubborn and they weren't going to take the H2000s, even though America was now allowing it. Then we got gold above 4,200, as we mentioned. Bitcoin had a really nice rally yesterday. Now, let's look at that one intraday, because that I expected would have moved Smarter Web Company, because it certainly moved strategy, but everybody was asleep at the wheel. They don't care about Smarter Web anymore. They don't even bother looking at it. So that one, I managed to sneak in some just before the close yesterday at 41.4. So we'll have a look at that in a second. But you can see Bitcoin here racing away at exactly 4 o'clock yesterday from 90,000 up to 94,000.
Nice.
4% straight line.
What was that due to, Rich? I missed that action because I was so focused on silver. What's happening there?
Well, that's the big question. I could not tell you the answer. But it's certainly, so that was a big move. So let's have a look at how strategy followed. It's moving identical, isn't it? But it moved from 182 to 198 at the highs, right? So that's telling us that we a 4% move in Bitcoins are worth about 7% in strategy. So let's say roughly 2 to 1. So strategy moved 7% and Smarter Web moved about 2.5.
Nice. And Phil in the gallery. What's also nice is it's not just the Bitcoin part of the room that's moving. Ethereum up more than 6%, Cardano up more than 7%, XRP up more than 1%, and Solana up more than 4.5 as well. Looks like it's all waking up suddenly. Of course, we've got that, only party in town, the Fed.
Do you want to go on to Fed?
Yes,
right,
let's do that.
Let's go on to Fed then. We've got a proper preview for you this morning, exactly like we get in the banks. This is from a good friend of mine, Aaron, giving you the full FOMC preview. So the base case is for a 25 basis point cut to 3.5%. That is 90% priced in. It's a done deal, right? They are going to cut 25 basis points. The questions are around what will be said in the press conference, what will be shown in the dot plots. So that takes us to 175 basis points of cuts in this cycle since September 24. Many dissents are expected, not necessarily for a 50 basis point cut, but for rates to stay unchanged. So that's going to be the dissent. That's going to lead to a hawkish press conference, right? So the question is, how much does Jerome Powell raise the bar for further easing, especially in January? But even across the first 3 meetings of 2026, of course, while he is still in power. So we're going to go through what the language that could be used, which actually signals a further pause. You can see at the bottom here. So the expected tone is for dissent is normal in a foggy data backdrop, right? We don't know what the unemployment picture is. We don't know what the inflation picture is. So therefore, we've got to go meeting by meeting. So the door may be left open for January. But if he wants to pause and signal a pause in the press conference, then he could say that January cuts require significant further weakening in the labour market, right? That would be aggressive. He could argue that 3.5 to 375 is not restrictive in real terms, right? So if it's not restrictive in real terms, he's saying that we've kind of done enough for now, that this cut is an insurance cut. We don't need another one.
So that really ties in with, what many banks and indeed the likes of Panmure Liberum are saying, keep the powder dry.
Well,
right?
we'll look at the banks in a second because we've got Goldman's and JP Morgan comments for you. So labour market, what is he potentially says about labour market? That the unemployment rate has remained low, and it has, right? You've only had a 32 basis point move up in the last 3 months. If he adds the word any in the statement, so that was in terms of in considering any additional adjustments rather than
Additions.
Sean Connery. In considering, at the moment, the statement says in considering additional adjustments. That could be changed to in considering any additional adjustments. And then the extent and timing of additional adjustments, that would also signal some kind of pause going forward. Right, Ange, you want to see what the banks are saying, don't you?
I do.
Right, let's go.
I want to know how wrong they can be.
There you go. Goldman's are saying they expect 2 dissents, but not a 50 basis point. So he's getting back in his box, Mr. Trump's best friend there. The language will be back to 2024 style when you need a higher bar. And then Powell wants to keep the optionality, right? Because you want to see more progress on inflation. You want to see that inflation move lower before any more cuts. That's what Goldman's are saying. JP Morgan. The statement presser will be hawkish. So that's priced in, right? It depends how hawkish it is. And you've actually got the chance that it could be a little bit less hawkish than expected. Morgan Stanley are expecting the recalibration to be complete. This will be the potential end of the cycle of cuts. December is prudent, right? So that's going to happen, but January uncertain. And then Hartnett, Bank of America, is talking about a dovish cut being the real tail risk, because you might buy that, first of all. You might think that will send equities higher. But what it's actually going to do is send a ripple effect right out the long end of the curve. Long end yields go higher because a dovish cut really creates an inflation risk in the long term. yields surge and equities initially will pop, and then bosh, you smack them on the head like one of those moles coming out of the...
Oh, that game, yeah.
Yeah. Because you could get a real wobble over the next couple of days. So that is your preview ahead of 7 p.m. tonight. Angie, you're going to have your glass of wine ready?
I am. And are you going to have your lasagna or your... Sometimes you have a gusto, don't you? A gusto.
I had sushi last night and it was wonderful.
Ah.
So I feel I might have done my healthy kick for the week already.
Oh, wow. So whilst you're doing that with your glass of wine or with your sushi, just, mirroring what Rich was outlining there for you, more dovish, yields likely to come down hard, weaker dollar, curveball steepens. Also, bear in mind, if more hawkish than expected, then the typical reaction, this is not guaranteed, friends, the typical reaction though is yields go up, dollar gets stronger, and the curve bear flattens. No matter which way you play it, listen to the wording very carefully and make sure your risk control is in place. My humble opinion is I'm treating this as a short-term trade window, not a new macro realignment, and the surprise moves might actually come in all the wording later on buried. So keep an eye on that.
We got a question on the chat. Jules asking, the Anglos merger, is that new news? It's not. Don't you worry. It was just a shareholder vote there. So in the Times newspaper, we can see there reporting on the approval by shareholders, and that beautiful picture there, that is in Chile. Have you been to Chile?
No, I'd love to. I haven't been to any bit of Latin America.
Oh, have you not? Oh, that's fantastic.
I am really gutted. Still on my bucket list.
As a, experienced salsa dancer, a bit of samba, flamenco.
I can see you doing the paso doble.
That's me in my South American.
But with a Scottish accent.
Me llamo Ricardo in Colombia. But yes, I have not been to Chile. I've been to all the countries around it, but Chile's still on my list. But that is what it's all about. That's why everybody is trying to romance Anglos, but they've ended up getting married to tech instead. So that is now a done deal. And we see that one of the big shames is that the headquarters will be in Vancouver.
No.
Still the primary listing will be in London. But the headquarters moves to Vancouver. Secondary listings in Joburg, Toronto, and New York. So,
and you guys heard me asking the question for Rich on Rich's behalf as well to John Mayer from SP Angel, because I asked him yesterday whether or not Glencore might come back, but he was saying that Glencore's got its eyes set on other M&A targets now. So the short answer to that is no from John.
One of the reasons the FTSE might be a little bit weak this morning, the Times going with the questions around Pascal Soiry and whether his family has invested in a major partner of AstraZeneca. So there's a bit of news out of nowhere, really. We weren't expecting this. So it raises questions about transparency and potential conflicts of interest, which is a shame because he's had a really good sort of career there so far and it is well liked. So Astra being, of course, is it the biggest market cap in the FTSE?
I think it is at the moment.
Certainly top three. I think it's biggest. We don't want any stories there to rock the FTSE into the year end.
He's also very well respected within the industry because he was at Aventis, later Sanofi Aventis USA, also joined Roche, and also Genentech. So, a long-standing track record in pharmaceuticals. Interesting. Speaking of...
I don't know if it's a big deal. I mean, so he's basically been invested in a company that then has an investment in one of their partners. So if we just put it back up there. So you've got Understory's investments, right, which the Sora family are invested in, have included a $7 million interest-bearing loan to Greening Australia. who is the partner of Astra's, a non-profit organization and a shareholding in a subsidiary. AstraZeneca launched a major project to plant 25 million trees across Australia. So they're trying to have a go at a non-profit, the Times is trying to have a go at a non-profit organization that has planted 25 million trees. Is that really the lead story? To go for one of Britain's top companies and question the CEO's...
Maybe the questioning surrounds the fact that he transferred his shares to his wife and 2 adult children in November, which is to me more...
November last year.
November last year.
Yeah.
Yeah. No.
I'm sorry, but who cares?
I'll tell you what speaking of track record, Trump and his comments, and the Financial Times also leading with the EU. This is the story: EU races to bypass Viktor Orban on Russian assets before the leaders meet in a summit next week. That's 210 billion euros. Everyone, I'm sure, on this chat is aware that there's this big push to get this legislation through, which invokes emergency powers to override national vetoes on the extension of sanctions. This is interesting because the move to vote is in the next week and risks enraging Hungary and other countries that oppose this measure. Speaking of which, good morning, Boston Frank as well, and also Donny and Shilling Warwickshire too. Oh my goodness me. Julian's just quantified how heavy that bar was. You didn't give us any health and safety advice when Julian was here, and Phil and I were holding this thing. 4.2 kilos.
Wow.
It was hefty.
You wouldn't want to run with that around your back, would you?
He had it wrapped around, with a towel around it, and I was looking at it because he'd kind of recycled it himself. It was covered in black soot and stuff. So I was there trying to figure out what this metal was. He was like, "You love this, Ange." I'm like, "I know. Once I get to it."
Good, right, we are on 7:52 then, so we're going to take a couple of minutes break and then we'll run you through the pre-market movers and some upgrades, downgrades. Join us in 2. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday, when we bring you updates from the markets and insights from our combined 100 years of investing experience. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. Every Monday I break down a carefully selected trade setup live in my Trade of the Week. Whether you're new to trading or have years of experience, Trade of the Week will help you to generate powerful trade ideas and execute them with precision using stop losses and profit targets. So if you're looking to enhance your skills and boost your confidence in the markets, join me every Monday for my Trade of the Week live on Trade Live with IG.
Hey, welcome back. And we are counting down to the opening bell for you under 4 minutes now. Got the bell ready? Shall we go for the bull? Let's go for the bull. Right.
Pre-market movers, we've got, now scrolling back up, Anglo-American expected unchanged, like we said, it's all as expected. Berkeley Group down 1%. They've come out with their H1 numbers, which are broadly in line. The operating profit was slightly higher. They're on track to meet their full year guidance there. BATS up 1%, extension of their share buyback. And then GSK have got some FDA approval. So GSK up 1%. And you got anything there?
Yeah, HSBC, Bank of America upgraded to buy. There Sainsbury's, Deutsche Bank raised that to buy as well. And a few other upgrades, downgrades. Kingfisher, another one in the crosshairs. Deutsche Bank cutting that to sell. And Continental, Barclays downgraded that to equal weight.
Those of you in London that go to the cinema, have you been to an Everyman cinema? We
love an Everyman.
It's great, isn't it?
It's wonderful. The one in Borough Market is a very, very good but well-hidden one that most people don't know about.
It's a premium evening out, you would say, isn't it?
Nice big comfy chairs.
Yeah.
You know.
But you're not getting away with less than 50 quid if you two of you.
No.
60? Maybe
probably 60, 70 if you go for the big bucket popcorn and drinks and everything, right?
Anyway, they've had numbers. Not enough people are buying those popcorns because they see a weaker Q4, revenue no less than 114 million and EBITDA of 16.8. That stock is expected to be down 15%. Let's see there. The group is operating in a challenging economic environment. There's not really been any big movies, has there?
Last one I went to watch, which was well worth it in an Everyman because I wanted a big screen, was F1.
I don't think I ever watched that, actually. I'll have to get that on DVD.
Yeah, it's really good. No, it's new.
Oh, get your bell in your hand.
Oh.
Come on, Ange.
Here we
You
are.
ready to ring it?
Yeah, come on, Fed Day. Right.
Right, so a little bit of a slow start out the blocks. Remember, the LSE opens at a random time period over the first 30 seconds. And we're seeing WPP up again. That had a strong day yesterday off the blocks. HSBC as well, higher up 1%. And as Ange mentioned, downgrade in Kingfisher down 2.2% there.
Yeah.
Back below the £3 level.
What's also interesting is taking a look at the banking space there. Lloyd's, Barclays, all down there. Let's have a look.
Shall we see the winners?
Yeah.
Winners are Sainsbury's with that upgrade. So there you go. You see an upgrade and a downgrade. Two stocks in the same sector has a 3% difference. That is all algorithms, right? That is all faff. If the research report came out on different days, would there be a 3% move? I don't know. It's call a little bit of bullshit there. So a 3% move. Let's see if it stays by the end of the day. But Sainsbury's up 90 basis points. Remember, when that placing came out, was that last week? We said that there would be a ceiling at £3.15 for the near term because JP Morgan probably were sitting with a load of stock there. And let's see how that's been trading. The day that it came out, remember, was when it dropped all the way down to £3.04. It then rallied up to 3.12. No, sorry, that's yesterday. Let's have a look back. Where are we? 3 hours. Yeah, which day? It was here. Yeah, so there we go. So it went down to £3. Andrew McKelvey managed to buy some on the Wednesday.
Yeah,
Wednesday, that's right.
There we are.
And then look at how it's been stuck there. Exactly like we said, a £3.14, £3.15 cap. And then it sold off back down to 3.05. And it traded at 3.05 yesterday. So if a stock ever needed an upgrade, it was this, and Deutsche Bank coming to the rescue of JP Morgan. But what you got to watch out for is when that overhang is cleared, right? And all the stock that was put into the market, when it finds a new stable home, not just traders like ourselves, Ange, when it finds a home for the longer term, then that will pop back up to 325. So if you're a long-term holder, if you're looking to pick up some Sainsbury's, then you're probably getting a good chance if you see it around about that £3.10, £3.08, even better. So I'm going to put an alert in there at 3.11, and I'm going to have a look to buy some.
Nice.
Right, shall we have a look at Europe, Angeline?
Yeah, let's have a look at Germany, or where have you got up first? You got France.
Let's everything.
Yeah. So we got Ubisoft up almost 2%. The ASML also up 8%. Havas up 0.5% there. Air France KLM up 0.75%. I saw some data yesterday and I was trying to refine it, showing that Air France KLM is likely to not benefit as much as British, IAG, owner of British Airways, in the Christmas period flying season. You've booked your tickets, haven't you?
Haven't booked it yet.
Oh no, I thought you were going to book it the same day as when you bought those tickets to the World Cup.
I know the World Cup took precedence. I'll have to wait till I'm paid to afford another flight to do anything.
Because TUI is down 3.5%. See my segue there? 3.5% after its results.
We spoke about Air France yesterday. Remember, it was down 9% just because somebody might possibly sell shares if they can't pay their debt in 3 years' time. Ridiculous reason to be down 9%. But we'd set a level there at 10.15 and it dropped down there. It dropped down to 10.13. I had the chance to buy them and I didn't press the button, Ange. And we literally picked that level perfectly because look at the way it traded throughout the afternoon. Back up to now, 10.45. That was an easy 4% that I completely missed.
Oof. TUI, though, is really in pain today. TUI is down even more now. This is after it gave a more conservative outlook than expected. Also saying that geopolitical uncertainties continue to hurt its outlook. Preliminary numbers for 2025 showing that it's above its own guidance, but it looks like it's the outlook that investors are jumping on there. Yes, it struggled in the past because its core German market has been weak and not managed to kind of lift the rest of the business.
Yeah, Germany's just been such a big story in so many businesses that we look at, right? So Vodafone and TUI. Excuse me. And then what was the other one we were looking at yesterday? Brain's gone dead.
Which is
obviously the German autos.
Yeah, the German autos have been shorts for some time now.
Whitbread getting hurt in the UK, but Germany's actually starting to pick up.
Yeah.
So.
But for defence, that was good because last few sessions, the report on further spend coming down the line for, German defence.
Yeah, it's not helping today though. Rheinmetall's down today, isn't it?
No, not helping today because until we see the numbers, until the fat lady sings, as you all know, Kingfisher shares down 2% after that downgrade I was telling you about. And we are also seeing a move lower for some of the reinsurers today. Delivery Hero, have you ever used them since you like Gusto?
No, I'm a delivery man.
Delivery man. Shares in Delivery Hero. Take a look at that. It is a hero today.
Right, I'm just looking at SWC. We haven't done this for a while, but with that pop-up in Bitcoin yesterday, you can see that the MNAV is at 0.82. And whenever it is down, well, actually, sorry, 0.88. But whenever it's down around that 0.85 level, then it depends on your view on Bitcoin. But I just see this as the ability to buy Bitcoin at a 15% discount. And so when, to me, Bitcoin feels like it's found support and it seems to be holding that 90,000 level really well, then why would I not want to buy it at 77,000? So SWC, you're buying Bitcoin at 77,000.
It's like, seeing Air Force Ones and knowing that you can buy it elsewhere, but at a...
the Nikes.
Yeah, at a discount.
Now you're talking my language.
But my Nikes are hurting my position.
There we go. So it's all right there, 43.45. This was, if you just got to watch for these things that people ignore. Strategy up 7% yesterday, and this thing had hardly moved. And now you see it 43 to 5 when you could buy it at 41 yesterday. Now, it doesn't sound a lot, but that's 5%.
Yeah, and boring is sexy. Good. This is incredible. Those of you, please let us know on the chat if you're still in SWC. We do know that Cam in the gallery is still in SWC. So let us know what you are doing with your positions. Formalizer, good day to you. Never seen Formalizer before. Adam Zaluz, hello, Adam. We haven't seen you for a while. Where have you been? Let us know. And Jagdeep Gupta is also on the chat.
Wow, Diageo, we are not kidding. Who was that? Jagdeep.
Yeah, it was Jagdeep.
Pointing out what is going on there.
It is. It's actually starting to get to the Aston Martin, category right now.
No,
look
rubbish,
at that.
Ange.
It's horrible,
That's
horrible.
absolute rubbish.
Look at that.
That is a hugely profitable company with a brand new CEO that's regarded as one of the best CEOs in the UK. It's nothing like the Aston Martin story.
But look at the share price. That is,
exactly.
I want to cry.
That is, we're buying.
Is he going in?
1,200 at 1601 because that, to me, is huge short-sightedness.
We need to clip
what this company could be.
We need to clip this for Axel because Axel is don't fight the trend. I can hear in my ear now. Yeah, don't fight the trend.
Get my dukes up.
And that's what Rich is doing here.
I do not understand that for a second with somebody, unless Dave Lewis has turned round and went, do you know what, I don't fancy this job anymore, then I do not get that move.
It's even gone past the, area of support there. Yeah, what Rich is in there. He's got conviction. Do you know something we don't know, Rich?
Well, I'm looking to see if I've missed something. I don't understand why it's had 5 days of a sell-off. Has one of the other brewers warned or something?
Not that I know of.
So, do you know what? I'm buying that for the pension as well.
Oh.
All in.
Oh. In for a penny?
In for £16.
Also taking a look at...
I think I will sell this at £20.
Whilst Rich is putting his trade on, we have also Shell. Let's have a look at Shell there. Because there's not much of a move, but we've seen some of the oil majors move lower recently. Glencore has become the first miner to export cobalt under the Democratic Republic of Congo. This is according to one government source and 2 trade sources familiar with the matter and reported on Reuters.
It was a UBS downgrade on the 4th. What day are we on now? That's last week. With a target price of £18.50. Downgrading stock to neutral. It's now got 13% upside because it's dropped so much since then.
There was some news from Diageo this morning. I don't think it makes much difference to
the strike.
Yeah.
Yeah.
I don't think it makes.
There will be no disruption to the supply of Guinness. Thank God for that.
No, I have to say, I do have a position in Diageo because the Guinness Zero, the non-alcoholic Guinness, is like...
You're long of that.
The best. The best. I can still tell in a blindfold test, this has been done, but it's pretty close, right?
I remember when you wanted to do that with me in the morning, in the morning show.
Right, let's have a look elsewhere. We've done much of Germany. Have we done lots of Germany there?
Yeah, we haven't done commodities though, so let's...
Whilst you're doing that, I have to check my...
Well, yeah, what are you planning to do with this silver now? Because up 1.3% today alone,
break out
61.50.
and touch me. Personal Jesus, you guys love that. It is up. I need to take some profit off, don't I? I need to take... Don't give me that look. Don't give me that.
This is not financial advice. But let's say you've got 100 units, right? How many units? So what percentage of your holding are you going to take profit on?
I would like to take 25% off.
Okay.
You know, just so I keep that profit nicely for Christmas.
You going to do it?
Yeah, I'm going to. Can you keep talking then?
Oh, that's never been a worry. Right, coming up then on the show, we've got Martin Harris joining us to talk about man versus machine. Give us an update on that and give us an update on how he's looking forward to going into Christmas. What his news is. And then we've got Piers himself. Yes, he's on the way in. Have we got confirmation he's coming in today? Apparently, you're a producer. I want to hear clarity, not apparently. So Piers on his way in, and yeah, so 8:35 we'll be doing that tech. This is not the last one of the year because we've got a special treat for you next week.
Oh.
Next week, we're going to have been through the Federal Reserve, right? We know what the rate cut is tonight. We know what the outlook is. But that outlook is going to be all dependent on the jobs market going forward. So next week, we're bringing you a special show from 1:30 in the afternoon on the day of non-farm payrolls, which I believe is Tuesday, so the 16th, is that right? And Piers is going to come in and join me, and we're going to do from when the payrolls come out right through. We're going to cover the US Open and then for 15 minutes into the US trade. So that will be live next week, Tuesday afternoon. Join us from 1:30 for the payrolls and the US Open. Time to guess the chart, Ange.
Yes, let's do it. It's a UK one, people. Make sure you've got your thinking caps on because producer Phil's trying to get it trickier than it normally has been. Here we go. Ready? Go.
Well, the chart lit up at sunrise like a Christmas pine. A shiny green breakout on the 30-minute line. Rich said it's bullish with a grin ear to ear. Angeline whispered, yup, Santa's near. But producer Phil in his snow-dusted hat said looks like a breakout, but I wouldn't trust that. He drew a frosty line with a mischievous smirk. You see this wick? That's old Saint Nick at work. Oh, guess the chart, don't lose your stake. Is it Yuletide joy or Christmas fake? Candy cane candle, secrets they keep. One wrong call and you won't sleep. 'Cause out in this land of elves and thieves, even the holly RSI deceives. Rich grabbed his mouse, said, I ain't no rook. Phil's been bending trend lines since the pre-Santa book. Angeline laughed and clicked by full blast. Said, if this chart lies, I'll short your past. Producer Phil pulled up a chart from hell. A 15 Christmas flash crash that rang the sleigh bell. The price dipped low, then shot up high. Even Rudolph couldn't tell you why. So guess the chart, protect your soul. It's a sleigh ride, not a stroll. If Phil's around, you best beware. He'll redraw candy lines in midair. But Rich and Ainge, they held their ground. Their festive guests still profit bound. Now the market sleeps neath the snow-glow moon. They'll do it again come Tuesday noon. But one thing's sure, before you start, you'd best be wise when you Christmas guess that chart.
Welcome back to Live from the Trade Desk with myself and Martin Harris, also from Man vs. Machine.
Yeah, that's where I'm famous.
Yes.
Man vs. Machine. Show.
How are you?
Yeah, doing okay in yourself, man.
Yeah, good. Good to see you. I feel like we've been ships passing in the night.
It's been a while since I've been on the proper Trade Live with IG show.
Yeah.
Yeah, it's always been Man vs. Machine as the main feature.
Yeah. Except when you didn't show up last weekend and Ange lost her voice and...
I'm paying for it now.
Ooh, here we go. Lots to talk to you about. Let's catch up on the portfolio. How is that doing?
So, I mean, we don't have the charts up today, but the final view was that the human portfolio against the original ChatGPT portfolio, we beat them in the end. So,
remind me again,
so
it was
humans,
like 9.2%, something like that?
It was something like that. It was just over 9%. Claude, however, which was there was a lot of factors affecting it. Claude smashed shot the lights out, over 10%. But we also only built the Claude portfolio kind of 3 weeks from the finish. And we were cheeky and we kind of like let it backdate all of its returns. So we had a lot of momentum and this position in Geiger Counter, which has this uranium trust sort of focus. And if uranium has been one of the top performing markets, and so Geiger Counter has just been driving returns in that portfolio.
I'd buy it just for the name.
Geiger Counter.
Yeah.
Yeah.
Let's have a look at some of the interesting footnotes that you've sent me about AI tailwinds and what you're looking at. Can barely speak without 2 more espressos in the coming few months. So talk us through this.
So I think, oh right, okay, there we've got it. So what I do want to say, I'm going to make 2 pitches before we get into this. Mm-hmm. One is that there's going to be a webinar happening on Thursday, which is the IG Smart Portfolio End of Year Outlook, and we're going to go into all of this in more detail. And so what I'll do is I will drop a link in the chat for the webinar. And the second thing is that if you transfer your portfolio to IG, you get a 1% cash back on your portfolio. Mm-hmm. That's the first promo. Mm-hmm. Second promo, you can't join the 2 together, but there is currently a up to 10% cash back capped at £200 on your AUM. So instead of earning interest on your cash, you're actually going to earn interest on your invested assets. So if you are not an IG client yet, if you're a first-time share dealing client, you'll be in that offer. Okay,
nice.
So I've got that out of the way.
Do we have a link to it?
I'll put them all in the chat.
Okay,
yeah.
Great. Because we need to put that in the chat, and also I'll share it with the Discord gang as well.
Yeah, so I think there's kind of, in a very short view, I don't want to get into this one too much, but the AI CapEx has remained one of the key features of the last 2 years. And this is the cyclical story going into 2026, is that who's actually going to make some money out of the AI spend. And so far, the people making money out of AI spend have been the infrastructure players. And we've spoken about a few of these guys before when I've been on your show. And so you're looking at the server builders, and it comes to things like server racks. It comes to things like cabling, cooling systems, fans. So nVent and Eaton were 2 that we had picked out there if you want to look at specific stocks. One of the things I'll very quickly mention about nVent is that AI productivity, there's certain sectors that AI productivity is now coming into. And what we're seeing is that the sales per employee is actually increasing. And the sectors that's been beneficial for have been autos, banks, media, software, telecoms, transportation. The sectors that's been negative for have been hospital care, home and personal products, utilities, materials and energy. And nVent has actually, they've expanded their sort of employment base so large. Mm-hmm. They're one of the big losers as an individual company. They're actually one of the big losers in the space. They're getting less sales per employee because they're hiring so many people to handle demand. So the view is like, where in the AI space could you invest? And those were our favorite names up on the screen.
Here we are. Have a look at nVent. It is nvt.n is the ticker. I like it. I like the look of this because it is obeying Ange's lines there. Its price action is healthily above 4 of the EMAs there that I've drawn. And its nose is now above the 20 as well. So nVent is also interesting because you were saying that it's hiring so many staff members.
Yeah.
Are you waiting for some pivot point where it starts consolidating all these hires? And is there an end date in your investment trajectory?
No. So I think that
Where's the exit?
Where's the exit? So I think that the exit will come as part of a broader signal within AI capex. Is that AI capex is predicted to increase year on year for the next umpteen years, and that is going to be discounted back to today. So we will be you're not going to have 10 plus years of the stock just doubling every year. Effectively, if we can predict that AI capex spend, is going to be 10x higher in 10 years' time, that price is going to reflect into today. Where there's some discussion now about the limitations of the amount of infrastructure and energy required to actually get AI off the ground, and that there is actually a limit to how much energy we have to supply the AI infrastructure, and we're not too far off from that limit. And so that's what I'm watching from that perspective. And the other thing I'm watching is that when productivity in terms of sales per employee in the winners from AI, so these guys this is below the picks and shovels. nVent are sort of the Levi's overalls in the gold rush.
Okay.
And so when the guys in the picks and shovel space, when the AI, when the end companies start dropping off, so when the productivity gains are gone, I think that's the signal that it's time to start selling out of your AI infrastructure winners.
There you go. So there is your exit point. Many of our friends here hear me say very often, your exit is sometimes even more important than your entry. If you're interested in this space, nVent's not the only player. You can also look at Modine Manufacturing, which is another one. Modine here. Also, can you see it almost mirrors what we saw on nVent? Another company that is involved in industrial data center supply chain is Hubble. Have you heard of Hubble?
I'm not familiar with Hubble. Let's learn.
Here we go, Hubble. Hubble, here we are. And surprise, surprise.
Yeah, similar outlook. All had a bit of a run in the middle of this year. What's that, sort of October, November, come back down?
Yeah, and Hubble's end market mix is quite favorable. So it looks at things like grid modernization. Modine, though, has 30% data center exposure. Why is Anne so interested? Well, lots of people here go, well, wasn't she like a huge tech geek? Yes. And like, why is she now so into the commodity space? Well, I'm really interested in all of this because my base case is no one is going to know what sort of chips are going to be required, right? It's like doing that.
Yeah.
Right? What kind of chips? Is it going to be open? Is it going to be closed? Architecture? The Chinese going to come forth with some cheaper chips,
Yep.
right? Americans going to keep the dominance. Like, who knows, right? If you think you know, like, well done you. But you ask the experts, even they can't tell. They're grasping at straws.
Yeah, well, I mean, even NVIDIA, Michael Burry actually made this point, that NVIDIA got lucky that GPUs, so graphics processing,
Yes.
turned out to, one, be really good for mining Bitcoin,
Yeah.
because it was available. And so people were using GPUs for mining Bitcoin. And then they got the second big run in AI. And so they kind of got lucky twice with a product that was not designed to do what it does.
It wasn't. It's like that. And actually, if you watch many of the, I'm going to sound really like I don't get out much. I don't get out much. You know that. I don't get out much. Jensen Huang presentations, which sometimes last 2 to 3 hours.
Yeah.
You'll know full well, like as you heard Martin say, it's like they got really lucky. And their gaming graphics cards were so incredible that they're literally using them back to front to be able to create all these amazing AI functions, right? But they're now trying very, very hard. It's almost like they're trying to get lucky again, but they're trying all sorts of ways. Like you get the sense that they're throwing spaghetti at the wall. So what I'm getting at here is, whilst all the spaghetti is being thrown, right, look at what's needed for all the spaghetti throwing, and that is where my commodities play comes in.
Gotcha.
You need to build all the data centers. You need gold, you need silver, you need a heck of a lot of power no matter which way you cut it. You can say that, oh, like the cheaper chips like Bill Blaine will mean that less power is needed, but you're not even thinking about the EVs, right?
Yeah.
All the multiple laptops that each person has these days, and all that needs power. Anyway, cut long story short, we'll need more power. So
we'll need
that's
more power,
copper.
and one of the big things there is that actually the Chinese chips are not, so the American chips, very expensive, very fancy, highly optimized. The Chinese chips, one of the big things there is that they actually use a lot more power. So they're not optimized for energy because it's not a concern of theirs. So they want the costs to come
using
down.
quantity instead of
So just
quality.
It doesn't have to be optimized for efficiency.
Yeah.
It just needs to do the job, and that's the big disconnect between where China is and where the Americans are with their chips at the moment. Is that one is highly optimized, highly efficient, and the other is affordable, and
So
that's what matters to them.
I wonder, I'm looking at you, I'm also looking at you people home watching this, or on your commute. Can you help Ange find out, because I'm trying to find that figure, how much more is required in terms of metals for these data centers? I'm trying to filter that number out. You look very promising, Martin. I'm looking at you saying, please find that number.
Find the number. I'll come back to
I've
this
been
one.
hearing mood music that eventually all this money that is floating around the AI space, they're going to actually use the money to actually help miners find these commodities, because there's not going to be enough around to build these chips and things. It's almost like, when we had that story about Jaguar Land Rover trying to buy up old cars because they had all the stuff to make the new cars, but they didn't have the chips.
Right.
Remember this?
Yes. Okay. So this was probably about 2021?
Yes.
Okay.
Yes. So same sort of idea, right? So let me know if you have that number. Monkey Man, Rags, Glasgow, all you clever people there, Jacob, Apex, you too. Please ask the Apex Army if they can get that number for me. Right. We have questions that we have to put to you, Martin. Are you ready?
I think so.
Are you ready?
No, I'm not ready. I don't know what the questions are. All right, let's go.
Okay, let's go. So what investment learnings have you had from 2025, and what impact will that have on your investment decisions in 2026?
Oof. This is a really tough question. I think, I was asked this 5 minutes before I came onto the show, and I've been sort of racking my brain around this. Biggest lessons for 2025, I think this year in particular, more so than other years, and this is I think a lesson that gets repeated, is taking the emotion out of your investing. And one of the things and this isn't just a punt on for the smart portfolios, but one of the things is that you need to be invested in the right risk allocation that suits you. Mm-hmm. And if you do that, things typically go better for you than worse. And 2025 was one of those years where we were lots and lots of negative news. From geopolitical concerns to tariffs, Trump up and down, And the big message for me has been to kind of, and other people might have repeated this, I'm not too sure, but to try and get the emotions out of your investing more so than anything. And when it's the headline news generated by journalists is, it's already factored in. You need to move beyond that and really look at what's happening in the underlying. There's always going to be an opportunity. I think that's maybe my second lesson, is that whenever something is happening, there's always an opportunity on the other side. Every time there's something bad, something in the markets, there's going to be an opportunity, and you have to be ready to look for those opportunities. And I think that separates a lot of kind of the seasoned investors from the beginners.
Thank you very much. And there we go. Martin's thoughts for 2026. Right, Apex waiting in the wings there. For all your questions, do put them in chat, or also send them to us at ig.com. We've got Piers and Rich coming up next.
Apex Army, wow.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. Every Monday I break down a carefully selected trade setup live in my Trade of the Week. Whether you're new to trading or have years of experience, Trade of the Week will help you to generate powerful trade ideas and execute them with precision using stop losses and profit targets. So if you're looking to enhance your skills and boost your confidence in the markets, join me every Monday for my Trade of the Week live on Trade Live with IG.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. Good morning, welcome back. It is Trade Live with IG. It's the 10th of December. The man is back in town.
Good to be back, mate. Back from Hong Kong.
Is it good to be? I love that you've dressed up as Santa Claus for us today.
Well, I thought just a little bit of colour. Good hat.
Where's your white? Your beard is going a bit grey as well.
I know.
You put on a bit of weight in Hong Kong. This is you literally.
My wife said that to me yesterday.
It's Santa Claus.
That's brutal. Okay, yeah. Thanks, mate.
What were you eating across there? A lot of noodles?
Not really. I was sort of just eating a lot of stuff in the hotel, the burgers and chips and that kind of thing. Lots of beer.
Right.
Lots of calories.
Good trip.
Very good trip, actually. Yeah. Successful. Smooth.
And so, for those of you that don't know, Piers was across in Hong Kong visiting his client, because remember, he does have a real job as well. As
believe it or not, yes, I went to see the most important person in my professional life.
Yeah.
In Hong Kong, who I haven't been back to Hong Kong for 13 years. It was wonderful. First few days was very. I thought it had changed a lot more than it had.
Okay.
But it has changed. A lot more Chinese influence.
Of course,
a lot of the old places that we used to go to. In fact, if I could list my top favorite places, they're all gone.
Oh no.
And they're
Marks and Spencer's cafe.
That's the one. But yeah, lovely trip, mate.
Good. Right. Well, it's good to have you back. Let's. Shall we get back to work?
I think we should. I think today is one hell of a day, right? We've got the Fed tonight, which obviously is the be all and end all, and we can finally talk about some yield curves and some bear steepeners. But also we have Oracle, which 6-9 months ago we would not be saying anything along the lines of this is an important earnings for the market, because they have been made the poster child for the CDS blowout, for the debt exuberance, etc., and they've been used as the hedge, if you will, for that, and they've obviously been hammered. It's going to be really interesting. I'm long 1 million, which is essentially 3/4 of a position.
Just reminding everybody. So Piers runs a book of $13 million. Is that right?
15 is the upper limit, yeah.
Yep, $13 to $15 million. And that we are taking as some kind of model portfolio, which he talks about regularly on his TikTok, on his Substack. Speaking about TikTok, if you're watching on there, you want to come across and ask any questions, join us on YouTube, Trade Live with IG on YouTube, and you'll find us on there, and we can see all the live comments coming in, including one about your hat.
In and out of the fridge.
What does it say?
It says, educationally speaking, which was Jacob put it together. It's a whole bunch of merch for the Apex Live, Christmas Live that we did.
Right, okay, that was one of the prizes.
And there's a whole bunch of things that I say all the time, one of which has to be educationally speaking, because of course it is education, it's not advice,
Exactly.
which is very critical to, and newcomers continually get the same party line.
Right, educate us on what you expect from the Federal Reserve this evening.
Yeah, I mean, listen, that's all that matters, quite frankly. I mean, I'd like to think that was all that matters, but it's been quite a long time since the Fed really mattered, if you know what I mean.
Especially Jerome Powell.
Yeah, exactly. And I think he gets an semi-unfair rap for what. I mean, he obviously messed up with the transitory thing in the beginning, but I think he's done an okay job. I mean, look at the economy, look at the market. But tonight he's going to have a tricky job, because he's probably going to have to cut. So we can put that in the bag. Yeah. But then what's he going to say in the press conference? And he's going to have to try and hawk that up a little bit, because there's a huge division in the Fed. Look at the Reserve Bank of Australia, what they did. Obviously, look what's going on in Japan, Canada. Everyone's kind of getting a little bit nervous and a little semi-hawkish. So for him to, listen, what are the outcomes tonight? cut 25 and then be dovish, that's a very, very low probability outcome.
I don't think the bond market would take that very well either.
I think the bond, exactly. And lots of people think, oh, cuts are great. But if he did that tonight, based on what everyone's thinking now, I don't think that would be particularly good. That would be somewhat sort of a shock, is it?
Equities would flip up in the first instance, but it would be one of the easiest shorts
The
of the
first
year.
move is always wrong.
Yeah.
Would be a great example. Algos would grab that, and then everyone would be like, hang on a sec, what's going on here?
Yes.
But then what's the other side of the coin? He's going to have to do what he does quite well, I think, which is kind of sort of semi-hawkish or maybe hawkish. We'll see. I don't think taking any risk, directional risk into tonight's a particularly good idea.
Yeah, completely agree. Bringing the risk down, being disciplined going into it, not being too reactionary on the actual statement. But my best guess would be that the hawkish delivery that comes through will actually see equities come off a little bit, and that would be an opportunity, because then you get that that realization that big changes are to come. It doesn't matter if he is hawkish going into February and April next year, because you've got a new guy coming in that's going to be far more.
Yeah, a guy who apparently is going to do exactly what Trump says, which is the biggest load of you-know-what I've ever heard, because obviously he can't tell him what to do, and it will be dictated by the data. But I just think that unless we have a shock tonight, it's going to be the stage is set enough in terms of some of the big boys that have come off to be able to have some sort of grind into Christmas. As long as we don't have some sort of shock tonight. And of course, by the way, we've got to get through Oracle and Broadcom tomorrow night.
Oracle's more important tonight than the
Oracle's
Fed.
only important tonight. I wouldn't say it was more important than the Fed, but I would say that Oracle's only important suddenly because of the debt situation, and Larry's got his hands full because he's obviously talking his way through the Paramount Warner Brothers deal, but at the same time with his son. But at the same time, he's going to have to try and, I mean, if he doesn't have some very direct questions tonight about his, why has your CDS blown out? Why is your stock behaving like it's junk when it's investment grade? I would imagine the whole conference call is going to be about that.
Yeah.
So we'll see how that goes. But
Would that be the dual CEOs that are on there?
Correct, yeah.
Yeah.
But they are market cap wise not relevant at all. Broadcom are tomorrow night. And Broadcom, by the way, with Hock Tan at the helm, are just slowly but surely, MAG 7 is a ridiculous acronym. For starters, Broadcom's bigger than
407 now.
Look where it's trading.
Oh, it's a breakout. Wow.
There we go. And that's a new all-time high, right?
Oh, this is
And that's because they just got the Microsoft gig, which obviously was a sore spot for Marvell. Custom chips. Listen, Broadcom are an extraordinary company because they are kind of stealth. And I say stealth, even though they're $1.8 trillion market cap right now. Everyone knows who they are. But for some reason, they're not. Why are they not part of Mag 7? And why are they not
completely
spoken in exactly the same breath as NVIDIA? In fact, they're actually beating NVIDIA right now.
And NVIDIA's suddenly gone very boring, isn't it? It's a 175 to 190 stock, and that's it, right? But you don't know what the next headline's going to come out. Yes, we got a bullish headline yesterday, and the stock's up 4% because Trump's allowing these H200s in.
I need to get to that question about Japanese bond yields.
I agree. That's
the source. We need to get to that. I actually don't care about the stocks. I care about that. Listen, NVIDIA is an obsessive subject. And quite frankly, Jensen Huang is a humble man, smart man who built his company from zero and quite frankly deserves all the applause that he's got. But give me a break. He's got competition. It's getting a little bit boring. Look what happened the other day. Trump said green light on China, and China came back and said no, thank you.
Green light.
And the stock is knocking about. I just don't care. There's so many other stocks to buy in this world. There's not just NVIDIA.
So is NVIDIA capped at 190 now?
I don't know, mate. I mean, listen, I'm not ever going to bet against NVIDIA.
But you've just found out the China story isn't there.
Yeah, but China's
that was the only bull story left.
China's only like 12%. I'm never going to bet against NVIDIA until such time that they announce on the conference call that things are getting bad. I'm just not going to. It's just painful. It's like Palantir, which I shorted yesterday. Guess what? They got a new defense contract overnight. It's up 2%. It's just painful.
Is that right?
Yeah, it's so painful. And as if that makes any difference to the valuation. But there we are. So yeah.
Boise saying Nvidia's market share can only go down, and the margins are probably peak as well. So there's just not a story left. It's a $5 trillion company, and it's capped there.
Well, listen, there is a story left if you assume that there's another 5, let's be generous and call it 10 years of massive growth in capex. Yes, it's going to be slightly different landscape, but there's still going to be the growth, right? There's
going to be growth in the total pie, but if your market share is dropping and your margins are falling, then are you getting a bigger part of that pie?
All I know is I'm not shorting Nvidia ever until such time that there's a reason to do it, because they're smart and they're good and they're the best. But they're a bit boring right now, and there's other companies to look at. Marvell is probably. Can we talk about Marvell quickly?
Well, yeah. So Broadcom has had a very different couple of weeks from Marvell. This was a great set of numbers in the first place. So let's start there. Let's look at the positive first.
Yeah, I mean, listen, as we've said for months now, this is always going to be a bit of a battleground. It's trying to prove itself. It's in the slightly niche market of the custom silicon chips, which are, by the way, what they make are called XPUs, which was an Intel brainchild. Intel came up with this idea to put GPUs and CPUs together and call an XPU, which is ultimately, it's like a sort of next generation version of a system on chip, a chip that does everything. These guys, we could talk for hours about the intricacies of it. We won't do that. These guys and Broadcom are the only real players in the world that make these chips. And these guys are making a lot of progress. And then, of course, we got that news a couple of days ago that Microsoft decided to can them and hire Broadcom. And Broadcom,
how important?
By the way, Broadcom's a $1.7 trillion company. It was up 13% on that news. That's a huge move. Broadcom are killing it.
Well, the bizarre thing was that the market cap that came out of Marvell was nothing like it.
No.
So
you
how
can't
does that
compare the two companies though. Broadcom are an A star, and Marvell are an A minus.
No, but sure, but the deal is for a certain amount, right? So if it's just a case of moving from Marvell to Broadcom, then the market.
Well, the thing is that for Broadcom, those chips are 60% of their business. For Marvell, it's probably like 23% of their business.
Right.
The problem that Marvell have is they're very diversified. I say problem, but they can lean on one thing or another thing, but they don't have like a pure play. So that's why they're always a little bit complicated and a little bit volatile in terms of their earnings and guidance, etc. I wouldn't write them off though.
That's changed because this was one of your.
Of course, it's changed because you have to change your. When the facts change, you have to change your mind. I'm not changing my mind. I'm just saying that that's a significant change in information.
Okay,
it's a big customer of theirs.
So
big customer.
Is Marvell out? Is it out of the portfolio?
I'm not buying it right now. I think that's a big customer of theirs that's just said no, thank you. I'm going somewhere else.
Right.
So I am.
Or it has been speculated to. It's not confirmed.
Correct.
Yet, right?
And that's a very good point, Rich. And that is and like all this news we get, no matter what it is, we need to make sure that is exactly what's happening.
Okay.
But if that is what's happening, it's not the end of the story for Marvell. I still like it, but it is. You can't just plow through it and go, oh, okay, cool, I still love Marvell. I do, but that's one of their biggest customers. So, you need to take note.
Right, so talk about rotation out of that in the portfolio. What about rotation into other things? Because the whole market feels like it's going through that in a stealth way.
It's kind of it's kind of like a stealth rotation that's going on. I say stealth because so many of these marquee names are still getting a lot of attention, are still close to all-time highs. Tech is still, the big guys are still in the game. But if you talk to, I've got one client, for example, who is, a very grumpy, old school. If you talk about CoreWeave, he'll say it's going to zero. He's one of these people, right? All he cares about is cash flow, and he's a bit like you, actually, to be honest. But he's long, he doesn't give an SH1T about all these tech stocks at all.
You can say it. Don't worry.
Yeah, but the point is that there's plenty of other things going on under the hood right now, right? There's rotations into lots of consumer names. I own Target, and I think we should probably spend at least a minute talking about Diageo because.
Well,
my God.
Let's stay
down again today. Where's that trading right now?
16. I've just bought some at 15.98.5. It's bonkers. Let's go on to that in a second. Let's stay with the US consumer.
Yeah, sorry. The US consumer is consumer stocks. I mean, I could list 20 of the retail names, whether it be Victoria's Secret, whether it be Gap, whether it be
Let's have a look at the charts.
AEO. Yeah, there we go. I mean, look at that. Crikey. And these guys have obviously, were in the complete doldrums. They've had a change of management, a change of strategy, a change of everything. And that, by the way, that move is purely on the back of a very small beat in sales. There's nothing particularly exciting about it.
Really?
This is positioning, though.
Move.
This is a great example of what I always bang on about. And I'm furious with myself because I wanted to be long this. I was talking about it on the desk about 3 months ago. I sort of lost concentration and went over and did something else. And
you lost concentration on Victoria's Secret. It's the first time I've ever heard you
that's
say
because
that.
they changed their strategy, Rich.
Oh, is it more for grands now?
A little bit, not quite the same as it used to be, shall we say?
Right.
Yeah, they've had to sort of shift it a little bit. But the point being is that they are finally. It's a bit like Abercrombie, right? Abercrombie were completely dead and forgotten, and then they completely reinvented themselves.
But then died again. This is the Abercrombie's actually had a bit of a shocker of a year.
What's the time frame on that chart?
Yeah, let's look. So this is what you're talking
look
about.
Look at that recovery. I mean, that's extraordinary.
But
And look at American Eagle. Thank Sydney Sweeney, our anti-woke hero.
good genes.
Great genes.
American Eagle Outfitters has had this is what you're talking about, isn't it?
But look at all these moves.
Yeah, and people who think that marketing doesn't matter and that brand doesn't matter,
Good
this
timing,
tells
though.
you
Good
everything.
timing because the market's rotating into all this stuff. But listen, we could go through a list of 20 or 30 US retail companies, apparel makers, just retailers with solid balance sheets, boring companies who've had huge moves, right? And no one's talking about it, but there's there's a lot of action there, and I think that what's going on with rates has got a lot to do with it. Secretly,
Right.
Not that secretly.
Let's
Should we talk about
go
it?
on to that.
Should we just go straight into the Bank of Japan?
Right. Do we want to go Diageo or do we want to go Bank
Well,
of Japan?
Diageo is just boring, but I mean, I had a conversation with my one of my biggest clients yesterday over coffee, and he's a 56-year-old guy. He's worked for some of the biggest hedge fund managers in the world, and we were talking through this, and I said to him, because he's long PA and he's long in the fund as well. He's leaving the firm. But I was just like, what am I missing? Because this is absolutely and utterly on its knees. And I went in, I thought, what is there a balance sheet problem? No. Is there an earnings problem? Obviously, the earnings have come down, but it's quite cheap. What's the problem? They've just taken on Sir Dave Lewis, who obviously was a huge star at Tesco.
It doesn't start till January. That's one of the problems, is that you've got one more profit warning in there. You've got the kitchen sink.
It'll go up on that profit warning.
That's.
And I'll be there.
Well, I bought them.
I'll tell you what, I'm breaking a lot of rules doing what I'm doing right now with this thing. I'm actually 12% offside and it should be stopped out. But it's wrong. It's the wrong price. I can't, unless there's some information that I don't know about.
Yeah.
This is the wrong price.
I mean, so I was actually talking about this at my Christmas lunch the other day with one of the big UK brokers, and they are a massive fan of Dave Lewis, and they are not sure whether the CFO will stay or not, right? Because he's been passed up for the main job. But he's also the guy that said, I've never tried a Guinness in my life.
Well, he said that publicly.
Said that publicly.
Okay, well, he probably needs to go.
So
That probably says a lot about the stock price.
so that's the two negatives. You've potentially got a really good CFO who will leave.
Are you serious? That's really dumb.
It was bad. And then you've got a profit warning, as every new CEO comes in does. But then
He's just going to sell some stuff, mate.
in February and March, you'll have a strategy day, and the strategy day will be to sell Guinness off or IPO or something like that, and then the stock will be £20.
DGA might cut dividend.
Yeah.
Hopefully.
Boise, where are you getting that from?
Yeah, is that information, mate?
let's see what that.
Boise's. What's this? The win. Okay. Yeah.
But it is. I mean, the dividend yield
Sydney
was also
Sweeney.
huge.
Good lord. Listen. I mean,
Was that just a statement, or was that?
No, that's actually what's
to a
been said
comment?
on the thing. So listen.
Right.
You can't get emotional about it though. But I probably potentially am getting a little bit emotional about it. But
I'm not surprised, down 12%.
unless I'm missing something, I don't quite know what's going on.
Yeah,
Right.
agree. Right, Japanese bond yields. The question has been asked. It is the time. Peter reminding us, do not forget to talk about Japanese bonds. Now is the time. Here's Buckworth.
God, this is exciting. So,
Give us an overview for people that don't have a clue and have never looked at them. What's going on?
okay, so I did a quiz last night for my crew, and one of there were two questions about Japan, because I was fortunate enough to sit next to a Japanese macro god for 10 years, and I knew nothing, by the way. I was zero until I met him, and he taught me everything about how the world really works.
Yeah, and absolutely Japanese.
You'd be shocked how important the Japanese bond market is to the world. Most of the time, it's ticking along, doing its thing. The Japanese economy lives in a different universe. They did 20 years of no growth. They have a completely different monetary policy. They're always the last to cut, the last to hike. And in this cycle, they have not even properly hiked yet, by the way. And everyone else is just about to cut, apparently. It's a mess. But what's going on, they've got just enough inflation to be able to justify the hike. But the most important point is that the Japanese bond market is the second biggest bond market in the world. And they own an enormous amount of treasuries. And what they do has an impact on the US Treasury rate, and it has an impact on $33 trillion worth of yen carry trade investments, which is not just the yields, not just treasuries, it's also stocks, it's real estate, it's a lot of tech. We saw what happened when we had that yen carry trade unwind thing, whenever that was. What was that?
August the 5th, 2024.
Exactly. It feels like yesterday, but it was a long time ago now. That is not what's going on now, because they're raising rates, but it's always just there in the back of the mind to remind people that it doesn't really matter what you think you know about stocks. If they decide, for argument's sake, to rip their rates, goodbye.
Yeah.
Stock market globally, right?
At the moment, it's predicted to be a very slow, steady increase, isn't it?
I don't think we're in that situation. Exactly right. So the new administration is quite dovish. They're doing this strange fiscal package where they're stimulating to bring down inflation by subsidizing energy prices. It's a bit weird, but it's actually completely contraindicated. But the Ueda who's by the way is very good. He is, and I only know that because Martin taught me everything about this man.
Yeah.
He's a genius.
Yeah.
But he is saying, no, thank you. We have inflation. We need to raise rates. And it's not going to be aggressive enough. The interest rate differential between the US and Japan is still so wide.
But coming in very quickly. If you look at the 20-year bonds in Japan, they're 3.5%.
The long end of the US yield curve is rising too.
Yeah, but you're only talking about a 1% differential.
Yeah.
Rather than.
No, of course. Listen, it's all about the margins, right? So it's the differential has shrunk.
Yeah.
Hence, we're having this conversation. But it's a matter of the speed of the move and when does it become a big problem. And we're not there yet, but it's definitely part of the conversation right now. It's actually so much part of the conversation. I mentioned to one of my big clients at a huge multi-strat fund yesterday, and he went, "You and the taxi driver," which is essentially just saying.
I don't know, but that's not the case, though, is it? Because nothing's happening that's not impacting the US market. It's not impacting US treasuries at all. But it could be the story.
Yeah, but everyone's talking about it, was his point.
Everyone's talking about it and watching it, but it's not.
He's also a you-know-what.
Yeah, a big grizzly one.
Correct. But it's important. And you know, and it's. I've been talking to my Substack people about it a lot now, because I'm finally I've got a reason to talk about the macro. I like to talk about it when it's actually happening.
Yeah. This is the story of Q1 or H1 26. Or actually, a different question. What is the story of Q1 26?
I think that we're probably going to, unless there's some shocker tonight, I think, which is unlikely because Jay Powell's a genius at massaging conference calls. I think we're probably going to just grind higher into the year, and then we're going to find ourselves around all-time highs, or maybe even a new all-time high. And then we're going to start January thinking, hang on a sec, what's going on here? And we're probably going to have a January sell-off, which is quite typical. But then I could see an argument for listen, we need something to change at the moment, right? I bang on about this thing called, which I've spoken to you about, called it's not a thing, it's the most important spread in the world, the DOMA spread, right? Mm-hmm. The GDP growth in G4 minus the 10-year rate in G4. And I have it as my Bloomberg header, saying DOMA spread is king. I've had it for 12 years. And the reason why that is...
Get you a hat with it on.
I probably should just have a thing saying DOMA. But the point being is that it's shocking how few people know what that even is, for starters. But second of all, that is it. You can just boil down the entire conversation, hours and weeks of conversation to that spread. If that spread gets below 100 basis points, the market's not going to enjoy that.
Right, so we're talking US, Japan, Europe, and what's the fourth?
Europe, China.
China. Of course it is.
Was that a serious question?
No, I forgot, even though you're publicising the
My
colours
eyes are just
today.
so dazzling, you're lost.
So GDP growth
China, Japan, Europe, US, G4.
minus the 10-year yield.
GDP growth rate,
Yep.
which is, let's call it for argument's sake, I haven't done the maths, like 3.8, whatever it is. Let's assume it's 3.8. Well, actually, it's more than that because we've got China.
Yeah.
Whatever the number is, GDP growth rate in G4 averaged minus the average of the 10-year rate. By the way, what is that number right now? Right now, I want to know, because I haven't done the calculations today.
Because I would have guessed it's like 0.
Exactly.
Yeah. So, and what?
Which means that equities have questions marks over them right now.
Because you want it to be positive.
It needs if it goes negative, you can almost guarantee that stocks are going to have a tough time. Almost guarantee. Even more guarantee, if we could talk about, if we want to get really sexy in this conversation, we can talk about the term premium.
Yeah. Oh no, we're not ready for the term premium.
We are though. Let's teach people about the term premium, which is the only price that matters.
Well, I'll tell you what. One afternoon. So next week,
High caliber conversation, by the way, mate.
Yeah, that would be really.
No one talks about Rich is one of the smartest people I know. He understands macro very well. Very few people even know what the term premium is, let alone the fact that it's the most important price in the world.
Yeah. And it encompasses so much into that.
The calculation for it is extraordinary. Blow your mind.
Yeah.
I mean, to put it in simple terms, it takes into inflation is the crux of it, of course. What is the additional premium that you demand to hold the long end yields? But if you look at the actual calculation, it includes QE, nuances, it includes inflation, GDP, everything.
Yeah.
It's everything.
And the market doesn't stray away from it for long.
If it's negative, stocks are on fire. If it's 250 basis points, stocks are in trouble.
Yeah. Anyway, we will cover that. One thing we have to tell you is very exciting. On Tuesday of next week, Piers and I will be right here in the studio at 1:30 p.m. That's because there's a big number coming out. It's non-farm payrolls. Non-farm payrolls, we're going to cover a live reaction. You're going to see me trading. Piers is going to be my analyst, portfolio manager.
Thank God, by the way.
And we're going to test what it's like for running through from a hot number through to the US Open. We will cover the US Open live as well. One of the stocks that we'll be talking about that is probably Micron, because it's been another one that's done very well, isn't it?
Yeah, I mean, Micron's a little bit of a sore spot for me because I'm very bad at chasing stocks. I'm really good at picking them early. I had a conversation with my client about 2 years ago, and forgive me if I'm repeating myself, but when AI exploded, right? We all know we need GPUs. We all know we need energy, but why don't we need memory? Which obviously we did need. And these stocks, whether it be SanDisk or Micron or Western Digital or Seagate, all the Korean guys, they all did nothing until just recently, and they've had a complete and utter massive re-rating. Obviously, Micron are the #1 DRAM memory player in the world, and they've been a cyclical play for many years, which has made them almost an impossible investment because of the cyclical nature of DRAM. But now they've got this very predictable growth coming from AI, and it was so predictable, I just hate myself so much.
I know.
Because I saw it coming, and even when it came, it broke out. The reversal in this stock through the 200-day was like the most aggressive technical reversal I think I've ever seen. I sent a picture of it to my client, and I just said, and my comment was, you never see a reversal that aggressive without the stock continuing higher afterwards. Why don't I own it?
But we had the chance 3 weeks.
That was a long time ago, by the way.
Yeah.
Now it's really high. Joseph Moore, who's the most celebrated semiconductor analyst, tech analyst, Morgan Stanley, he had a shocking call. He came out at 2, 3, whatever it was, right on that high. When I say shocking call, if you ask him, he'd say that he just doesn't care because he calls it on the high, made it his top pick after a 300% rally. And I was joking with my Substack people, just saying, you know, what a moron, because what a terrible timing. It went down 23% over the next 2 weeks.
Yes.
But look where it is now. It's back at the high.
Yeah.
And professionals don't care about that dip. They like to buy highs.
But look at the differentiation in the views. Goldman Sachs are telling you it's going to 200, right?
Yeah, but they're probably short.
And Morgan Stanley tell you you're going to 338.
Yeah, I wouldn't listen to what Goldman Sachs have to say about anything. They're just talking their own book.
Or the opposite.
Yeah, exactly.
The opposite of
I mean, listen, they're very smart people, but they're terrible at calling stock.
But overall, as a whole,
Go down well.
as Piers says, yeah, we'll put that one.
True though.
As Piers says, this one potentially fully valued at the moment. You got a price target $248, and that's exactly where the stock is. So
Probably the best price action out of any stock in the world right now. It's insane. I tried to short it the other day and I immediately got out.
Yeah.
Because it opened up with no reason whatsoever, up 3%. I was like, oh, that is not me, I'm out.
It's a really tricky though when you see stocks as fully valued as they are, right? We've covered it.
I don't think this is fully valued. I think it's got a lot further to go. My short was just a trading thing.
Right, okay.
Because the positioning, even though it looks like it's crowded, it's not remotely crowded. There's a lot more people that need to be long micro.
Not enough,
This has
not
spent
enough people talk about it.
almost 2 decades in the cyclical I don't care basket. And now it's a stock which serious money has to consider buying. And I don't think they're even halfway through buying it.
What do you? We all know what this time of year is like, right?
300 probably.
So you'll have 2 weeks now of nothing really happening. They'll ramp it up into the 31st of December. All these names will close at their highs. What do fund managers come back in the first 2 weeks in January? What are they going to do? Because you've got
Depends where the
stocks like
market
that that are up in the. Let's say everything adds another 3%.
The market.
Across the board, 3%. Yeah.
We assume we get to 7,000 on the S&P.
Yep.
Then we have a little sell-off, 3-4%. Well, the market will come up with some excuse in January, because it'll be slightly overbought. It'll be, if you look at the chart, it'll be just it'll be a sort of a very straightforward sale. But then we just need more guidance, I think, in terms of what's actually happening with this. I'd quite like to know what the actual data is in the US at the moment.
Yeah.
Like, it's all well and good for us to sort of laugh about the fact that we don't have the data, but we don't have the data. Well, we kind of do have the data, but like,
we haven't for 3 months.
What is the employment data? That'd be nice to know. Not September. I'd quite like to know what it is now. And the Fed are going to tomorrow night. The Fed are going to be making their decision without the data.
Yeah.
And you know, there's a lot of noise around it all. Unless we have some macro collapse in that spread, which are inflation and growth.
Yeah.
It's
6, 7.
It's just I can't see a reason, particularly with every single professional long money market cash.
Yeah.
How we don't just keep buying dips until something goes wrong.
Okay, so potentially a January dip, but is 2026 going to be a stock specific story, or is the S&P going to go another 12, 15%?
No, I don't think it's going to go another 12. I think it'll be stock specific, but I also think that there's going to be a little bit of a reckoning in some of these tech stocks or not. They need to prove themselves. They need to explain what the return on investment is and the timeline. If they do that successfully, we're going to get another 20%.
Does Oracle do that tonight?
I think tonight they're going to beat massively on the top line because the expectation tonight is only 15% growth. Can we just break this down quickly? So last quarter, when they had that ridiculous move, by the way, if you look at the line items, right, the top line, the top revenue growth for them was 58%. Some of their line items one of their line items in particular was 700%. Right? That's Oracle we're talking about, right?
Yeah.
That's why the stock exploded. Everyone just lost their mind. But like, my only concern is that the guidance was strong last time, and they can't change the guidance.
No.
So, but I would be shocked if the revenue number is not massively higher. The only question is, and everyone, some person on TikTok said to me, "Oh yeah, but their earnings are going to miss because they've got loads of debt." That's on the balance sheet, not the P&L. Pal.
Yeah.
Hello. So the debt's got nothing to do with their profitability.
This is why the numbers are expected to
Listen,
be
they're
very
going
good tonight.
I would be shocked. I don't get excited about owning anything into numbers, but this has been so aggressively de-risked. I find it impossible to see how they're not going to beat tonight.
So let's say the stock's up 15%. Do you fade that
Yes.
because of the
I'll
debt?
exit that thing right there and then.
Right.
Because I don't think that this debt story is going away anytime soon. The market's
Do you
changed
not
its
think
mind
they
a bit.
managed to address that tonight?
Maybe tomorrow night.
Sorry, tomorrow.
If they listen, that's the
No,
point.
Oracle tonight.
What day is it today?
Wednesday.
Oh, sorry. Yeah. Sorry. What am I talking about? Oracle is tonight. If he manages to massage the debt conversation, listen. If they grow into what they're doing, this stock, we've had this conversation many times.
500.
This stock, this is a blip on the screen. They're going to end up a lot higher.
Yeah.
But in the short term, as a trader, if this goes up 15%, I'm out.
Yeah.
Because it'll come back again and it's going to be knocking around. There's still lots of haters. It's a little bit of a health warning.
A lot of people are short it though as their hedge. That's the problem.
That's why I love it. The positioning's aggressively bearish.
And we sat here 2 weeks ago and went, there's no way that this thing trades at $201 going into numbers. It's not. Now it's 224. It's a little bit of a harder discussion.
And and the price action's completely shifted. It's kind of just grinding its way higher. But yeah, I'm taking a position tomorrow.
Right,
Tonight, sorry.
two really quick ones because we've already been going for God knows how long. I'm bored of you.
Too long.
Viking Therapeutics and
God.
PayPal. That's the two we've got to cover.
Oh God. So do you remember when I started talking about this? Oh God, sorry, that's my
About
fault.
Viking.
When I started talking about Viking, I was talking about Structure Therapeutics and Viking, the two GLP pipeline drugs,
Yes.
and they are. I initially owned Structure Therapeutics, and that was the one I had my heart set on. And then I brought Viking into the equation, and then I got rid of Structure and I kept Viking.
Okay.
And
Good story, bro.
well, it's not a great story because it was up 130% 2 days ago.
No.
Because they've managed to do the oral pill, which is what everyone's trying to do in GLP-1.
Structure was.
Structure have apparently got a pill that works, and it was up 130% on the high, and all the analysts are scrambling. It's gone from 20 to... Have a look at this thing.
Did any of the Substack have it?
No. We've got Viking, which is going to get taken out tomorrow afternoon.
Please tell me if somebody on the chat had this.
Mate, it's a very sore point because I love this kind of stock and I had it, but I don't have it anymore.
Okay,
Anyway,
so updates on Viking, yeah.
But that obviously, and hurt Novo and hurt the whole space because everyone's fighting to get a pill. Because at the moment, who wants to do an injection? Just take a pill. But it's a big win for them. And it's interesting, the analysts are now at like, what's it trading at? 60 something?
Can you put your microphone down?
I can't because it's got...
Put it down.
Is that okay?
Yes.
After that rally, the analysts are up at 95.
Right.
So it's interesting.
And what was this
But I
pop
still
up?
own-
Was that real?
So is that Viking?
Yeah.
I don't know what that is.
Trade 60.
Oh, that was 2020.
No, that looks it's on Monday. It looks like a spurious
I
print.
don't know what that is. But this has been acting quite well in the face of what's going on with Structure.
Yeah.
And I remain long, and it's kind of my Hail Mary takeout play. But even if they don't get taken out, I still think that it's got much.
Adam Deleuze, you legend. He's taken us through our Domar numbers. GDP growth at the moment for the G4 is 2.85%. And the 10-year average is 2.66.
There we go.
We've
That's a
got
very tight spread.
0.19% positive. Thank you, Adam. Good man.
Thanks,
this
mate.
is why I want to hire him.
What a legend. Well, there we go. That's not ideal, by the way.
Yeah, you want it to be 50
More
bits.
than 100. Well, more than 100 would be nice. More than 50 would be nice. Less than 50, interesting.
Yeah, and then I assume you actually want to look forward though. I want the 2026.
And there's nuance to it as ever.
Yeah. Okay.
Thanks, mate. That's helpful. But yeah.
One more PayPal, and then you're done. Then we can go.
Yeah,
to
I mean,
breakfast.
someone made some funny comment about me being long PayPal and Novo, and what was the other one? The other one that's had a shocker.
What have you had a tough couple of weeks?
No, my book's flat my book's up over the last couple of weeks. But that's the beauty of having a perfectly constructed book, Richie.
You need theta, my friend.
I've got stocks that I've got awful stocks in my portfolio, and it's still up. So
Yeah.
that's the
Yeah.
beauty of it. I cut PayPal for two reasons. One, I was getting on a plane. I needed to reduce the risk, and two, it's just trading like a piece of dog, you know what.
Yeah.
And I have to respect the price action. I will buy it back because it's exhausted. But you can't get married to positions. This stock is undervalued. It's probably a 2026 story. I'm very focused on it. I will get back involved. There's other things going on. So at the moment it's not in the book, but it will be put back in the book. Diageo, this one, and Novo. Novo's also just very, very painful. Listen, this is an undervalued company. I have no doubt this is going to have a huge rally at some point, probably 2026, but I cut it in half because it's just annoying me.
Novo's is.
It's just annoying me. It's
Okay.
just, there's a battleground.
But that's, like we said, reducing risk into year end. Next Friday is the big expiry. December's a huge expiry. After that, the market, people don't care. People are done. Everything expires on the 19th of December, and then you've got to be very careful because markets are not nearly as liquid as they usually are until the first week in January. Piers Buckworth, I'm going to ask you one more question that we are asking everybody, because as you can see, we've got our Christmas tree, we've got our selection box. So it is that time of year when we make just ridiculous predictions for the year ahead. And my question to you is, what is the biggest lesson that you've learned in financial markets in 2025, and how is that going to help your performance in 2026?
Wow, in 2025, it's hard to learn lessons in 2025. If I'm being brutally honest with you, at this stage of the game, what have I learned? I didn't really learn. I didn't really learn anything. I tell you what I did. I didn't. This is not something that I learned, but I suppose you could term it like that. I learned that a company that has a non-GAAP and GAAP profitability and growing very fast and has a lot of free cash flow is allowed, apparently, in the investment and professional community and the retail community to trade on 135 times sales and keep there and stay there. And you get other competitors like Salesforce saying, I wish I had that valuation, and I justify that, and which it's kind of changed the game a bit.
And the CEO can lose his mind on national television and
sell the stock, and the world can blow up and it still goes up. So not that I learned anything about that, but it was definitely a moment where I was like, okay, we need to factor that into our thinking going forward if there are companies that are allowed to do that.
What are you going to take into 2026 with that? Be more careful around single stock shorts on valuation, especially when the market
valuation doesn't mean anything until it does, right? It's just, what am I going to take into 20? I don't know, just tiredness and just exhaustion and just like and just like more evidence that you can't short expensive stocks just because they're expensive. You have to pick the right one and know exactly what you're doing, and it's just exhaustion, and that would be my answer to that.
You gonna get a break over Christmas?
Not really. Just hang out with the kids in Hampshire.
Nice.
Not going anywhere. I'm happy to be home actually. Hong Kong was quite tiring in the end.
And they'll both believe in Santa Claus as well, won't they?
They do.
Is that why you're
very
dressed
much
up
so?
today?
Yeah, funny man. They love. I mean, they're so excited about Christmas. They love it, and also I feel sad about the moment when they watch shows about people talking about how Father Christmas doesn't exist, and I'm just like, oh god, and they're just like, he does. Like, okay.
Zane must have his kind of.
Jacob bought him an elf on the shelf the other day, and he's just convinced that it keeps moving around the room.
Nice. Oh, really?
It's a magical time. It's not going to last much longer.
It is magical. Rico Segal, carping mad should be a new term.
Oh yeah,
absolutely, right. Carping mad.
Roasting the pig.
Right.
That's what we do.
Well, what we're doing now is going for breakfast because you owe me a nice breakfast, I think.
I bought the last one, but I buy this one too.
Yeah.
Yeah, that's okay. You're Scottish, so you're not good at picking up tabs.
I think we went to Pret.
It's okay. I think our balance of scales is quite aggressively weighed in your favour. I'll buy you breakfast.
Thank you, pal. Thank you so much for joining us. A reminder, Tuesday at 1:30 p.m. We might come on at 1:28 p.m. just so we get those numbers up live. We're going to bring you the non-farm payrolls, then we're going to bring the US Open, and you'll hear more of Piers' rambling live on air on Tuesday. So plenty educationally speaking to come. Thank you very much for joining us on the TikTok. Thank you for joining us on here. That is us done for today. Jacob, nice job.
Thanks, buddy.
Good hat.